So this will be the first part of Blueprint Remastered, or one of the first lessons anyways. I'm not sure if it'll be the first lesson or one of them. Just a section of Blueprint Remastered that needs to be discussed. So in whichever order I decide to release it in, that's fine. But today we're talking about something that's pretty important and something that I myself was using and have been using for a long time in trading. And I typically get asked the question, how are you so successful so early on? And a lot of the things we talk about in charts, as we discussed yesterday on Chart Raiders, a lot of the things that we see on the charts we have to look at with a little bit of a different kind of mindset or strategic eye. We always take these parts of the charts and kind of dissect them. And we work with a 3-lane trading system, right? Like everything with PA on this side being everything before the trade, PA, everything during the trade, which is RA, and everything after that moment of execution happens, which is CA, which then just cycles back. And once you have your CA completed and levels get hit, then you just cycle right back to PA, because you'd simply be doing, come on, Control I, Alt I, there we go. I don't know why I was hitting Control I. We simply flip our chart over, and then we're back into the next part of this thing, where you are looking to assess the movement on the trade going back into PA, right? So we know this already. We've talked about this. You finish CA and you go into PA, right? So we have to start thinking about PA as procedural analysis, as everything that could happen, that we have to expand what PA means a little bit. So if PA were simply to mean everything before a trade, we kind of have to take our old theory of PA and mix it with our new theory of PA, because the way we used to look at PA was procedural analysis was kind of the things that you do outside of a trade, like not marking technicals, things like meta reports, getting ready for the markets when it makes sense to scalp and long. And now we've defined in a new way that PA is this part of the trade, which is kind of in a way the same thing, everything that happens before a trade. They both share a commonality that even though this is everything before, during, and after, PA still kind of shares something that before you make a decision, you have to kind of consider this procedural queue of events to happen. So we need to start thinking of trades in terms of implied odds or implied profits. And the word implied comes from poker. So this is something that I created for myself way back in the day when I was first starting. And when I was trying to take profits, I had to find a way to, I didn't have to find a way, but I always kind of took my poker knowledge and morphed it. Like, I kind of always took my poker knowledge and morphed it into a way that could work with the charts, like taking it and just trying to think of things differently, like bankroll management. How can you manage your bankroll that makes the most sense to constantly be in a position where you never lose it all? You can take shots and scale up, and you can have the system that allows you to constantly grow while at the same time reducing risk. And there you have bankroll management, just like in poker. You have $1,000, you split that into either 40 buy-ins or 80 buy-ins. That way, if you have $1,000, you don't go and do 2 $500 tournaments. If you're a tournament player giving you 2 entries, you would split that into 40 positions. So you can enter 40 tournaments. So if you had $1,000 and 10 tournaments were $100, that means 1/4 of that would be $25, which means if you wanted to do 40 entries, it would be $25 an entry. So the most you could ever enter on a tournament is a $25 tournament. And if you made your bankroll all the way up to $2,000, it means then you could enter $50 tournaments, because you're still living inside of that 40 entries rule. And then the same thing applies with like buy-ins and cash tables, sit and goes, whatever your style is. You would have these rules that define bankroll management. So I always try to relate kind of these poker theories and poker teachings in a way that you could say, okay, now this makes sense from a theoretical standpoint, no matter what game you're playing. Bankroll management, implied odds, like another one they call is game theory optimization, which is GTO, the most optimized decision given any one move. Like, I always would take these kind of theory lessons and morph them and say, okay, that made sense in poker, but how does it make sense here? So today we're talking about implied odds. So I'll describe what implied odds is in poker first. I'm sure many people, this is just going to be noise to them because they're already well aware of it. Implied odds means that how much you could potentially make in any given hand that you play in poker. So if you have, say, like ace-ace or ace jack, what are the implied odds? What are the implied odds? So if you've put $10 into the pot and you think that two other people will put $10, but this has not happened yet, you're pre-flop and you've raised to $10, and you can say, oh, I think this person's going to call me and that person's going to call me. It's going to make the pot $30, right? So you're implying that, hey, there's this $30 implied odds. And then if there's one more, typically there would be two more rounds of betting, and you would just say, okay, well, if $30 is what happens before the flop, then I'm going to say that what I'm thinking is that I'll put $15 in half the size of the pot and they'll both call twice. So you're going to put 15 and they'll both call, right? And then, so you have 15, 15, and 15 going into the pot. So that's another $45 going into the pot, right? I guess I should have just used the text tool to do this. It might be a little easier, but that's fine. We're already down this path. And then, so at this point you have $45 plus 30. So you have $75, right? You have $75. And then you're saying, I'm going to put another half size pot, or let's just round it up a little bit. Let's just say we're going to put $50 in. We're going to put 2/3 of the pot in, $50. So we're going to put $50 more on the final street, and one person's going to fold and the other person's going to call, making it another $100. So the implied measurement here is $175 total. So the implied odds of this bet $10 would be $175. So if we played this out in our head 10 steps ahead and we were saying, hey, what are the implied odds if I commit to this hand? What is it worth? We would use that as a measurement of saying, okay, this is going to cost me the first $10, the next $15. I can't remember what we just put, actually. Let me try to redo that. I think I can in TradingView. No, I can't. Then we said $50 and $100. So that means we were going to spend $50 here. So 50, 60, 75 total. And the one in between. No, that was it. So that means we're going to spend 75 to win 175. So it's going to cost us $75 to win a possible of $175. So your implied odds would be 75 times 2 would be 150, and there's $25 left over, and $25 of 75 is 1/3. So your implied odds would be 2.3 to 1. So you'd have something like this. And my math is a little rusty on this with implied odds. This was a very old poker tactic. This was completely not used many aeons past. So this is, 75 times 2 is 150. So that's where you get your 2.0. And then you have $25 left over, which is, $25 out of your 75 is 1/3. So 2.3, that's where the 0.3 comes from. 2.3 for 1 was your implied odds. So you had to be right. As long as you were right 50% of the time, you would make money in poker because you're getting 2.3 for a 2.0 investment, right? So this was like the way implied odds in poker worked. So we have to think about our trading in the same way. There has to be some type of measurement when we take this risk, and this is now going to go into risk assessment, where we can say, okay, the impliement of what we are risking in any given trade, and I want you guys to keep RA fresh in your mind on this, the impliement of any given trade and what we are risking. So the greater the risk, the more the implied odds are going to be on the other side of the chart. So, for example, this weekly level was a super high risk level. This weekly level was back here. If you are going to take this weekly level as a knife catch, the risk is extremely high. Like you've got to RA this thing. It's polarity on the grander scheme of things. So you might have, 1 or 2 polarity points here. Therefore below it, like this is the only leg of the move on the weekly. So first off, that defines one specific part of this chart as being the break level, which could also potentially create the origin. So this is a huge polarity moment. So it's kind of like its own subcategory of polarity where, yes, this move can go lower, and it likely will go lower either here or here, one of those two. Yes, it will go lower, but it still becomes like a pretty decent spot to try to take a position on. And if you do, it's not something you can hold, but if you were to take a position on it, you can't, given the amount of risk you're taking in a move. And we're going to use a text tool for this. So we're going to go 10 with subcategories inside of it. So this is not to say that it is the final move, but it is to say it is representing one type of polarity in the future. So this would be one type of 10 with subcategories. And then this one here would be, and we're going to add a second one here, another 10 with subcategories, which is this one here. So if this, you know what we're going to do? Instead of floating it like this, what we're going to do So we're actually just going to put it inside of it. And we're going to go on the weeklies, we're going to go on the left side. Everything else, we're going to go on the right side. So on the weeklies, we'll go on the left and everything else will go on the right because this is going to get a little cluttered. So with this level here, and let's make this orange because we can't really see it, can we? Orange looks good. Blue, red, white, no. It's a good color to make this thing. Oh boy. Okay, we're just going to go with orange. Orange it is. So with this level here, it does have subcategories underneath it. And we'll do it like that. There we go, so we can see it. This does have subcategories underneath it. This does have subcategories underneath it as well. So if these are implied to be a 10 and 10, you have to say if you are going to take that type of RA risk where you're taking a 10 out of 10, you have to let your implied odds in this trade or your implied trading profits, you have to let them grow. If you're taking a move that is somewhere else in the charts that's a little higher up, that's an 8 or a 9, you're not going to have as much implied odds because you simply have a point of polarity in the trade. So your trade is either going to, at a 10, support and move up, or it's going to support and break down in a big way. So if you're taking this risk, your implied trading profits are pretty big from that point, right? Like they're pretty big. It would almost be the same thing as if that 4-hour trend break that we had yesterday, which would have been this guy to this guy. Like if you're playing a short on this, was this it? I believe this was it from yesterday. And then there was a 1 hour, which was right here, right? I feel like there's another, oh, right, because you can use that, but then here, first off, let's color code them properly. So 4, and you can also use this as like a 4 subcategory, but it never actually hard closed. This is what we were using during the tournament, and then it never actually stopped moving on the 4 to give us an actual trend. So we're actually going to mark this as a 1 hour because it never actually established the 4, but at this moment at 8 a.m., it did create a trend for us. And if we had created a 1 hour candle on that's white, it would have been, which we were above that point at some points. Like we did go up and they were kind of trying to close as white candles, but it never could. So anyways, that's fine. It was a 4 hour during the tournament or what we were trying to hope to create. And then it ends up just being a 1 hour, right? So that's fine. But if you're playing this trend break, it's just like we talked about yesterday during Chart Raiders, it is hyper polarized in the move. So when you do something like try to trade the reverse point of it, which would be here, confirming the larger dump, or whatever point you're trading here, like whether it's a 15 or a 5, I'm sure there's some type of level here that would have been great. Obviously I haven't looked at or found it, but I'm sure there would have been some. You start with your inverses. You have a 5-minute inverse. This never closes. That's fine. I'm sure there's some type of origin level that refused to hard close, and we can go find that if we want. Here, go like this. If you're playing this trade, the move is so polarized, and you could even get the backside entry here. I'm assuming there's some type of origin level right here. You've got an origin 3 right here, so you've got your first one right here. You just find the first origin in the trade, right? Right here. It actually broke that, so that wouldn't have been in use anymore. So it would have been that 3, right? And that's fine too. You do have both here, and that's fine. So you get entry on the spot here. You've lost trend. Maybe you bought backside. Maybe you bought the origin. The price that you shorted at didn't really matter. We saw teams taking these shorts up in these regions yesterday. Like really great trades. Your implied profits on this trade are huge because you're playing a point of polarity. So if you're taking your trade and you're saying, look, this is an RA 10 out of 10 because it's the trend, it's the polarization point, which is what we talked about yesterday. If it's a 10 out of 10 for polarity, it means your implied trading profits are going to reflect that risk. If you were to take a point like, I don't know, let's go to let's just pick a random spot, 5-minute chart right here. Sure, perfect. Here's your 5-minute level. Does it ever get hit? Yeah, it gets hit. Perfect. This is not polarity of a move. This, if you were to look at the whole entire range, I'm sure you're going to find much deeper points that were simply untested. Like this is a much deeper point. This is a much deeper point. I'm sure you're going to have hourlies that are deeper here. You could make a case for trends here. You can make a case maybe for this as a reverse. you can make a lot of cases for different levels, but what we do know is this isn't the like final polarity in a trade. So if you're taking this move right here, your implied trading odds aren't going to be that great. It's risk appropriate to what you're taking in the trade. So if you're taking a trade that's say an 8 or a 7, I very often see this, or even define the polarity in the move. Like even on this bottom side, where's the 5-minute level? It was right here, right? So here's your 5-minute level right here. And I think something else got hit here. It was up here, and then it went a bit deeper. And I believe if you follow the trail, you end up with hourly levels, right? Because your first hourly was here, and then your next hourly is here. So this would have been like pretty polarized too. This would have been like extremely polarized because, at that point it creates a trend. There's no hourly trails left. I don't really think there's any 15 minutes. So this became like a super high risk spot. So if you're taking this trade and you're saying, look, this is like a 9 or a 10, those implied odds, you have to weigh the RA of the trade, the risk of the trade, and how much potential there could possibly be. So, I see a lot of people doing stuff like this and saying, oh, if this supports the move, right? And this was the trail here, and this supports the move, it means you are at first going to kind of go and attack maybe this level, or you might have that kind of polarity that you're looking for, maybe all the way up to even here. So you've got a 15-minute polarized point there that would kind of control the move on the top. You also have this hourly here. So you could use this, right? You could start here and start working the polarity down. And you could say, okay, oh my God, I keep doing the text side of it. Let's not. Here we go. We've got the hourly here. You've got the hourly reverse here. What else do you have in this trade? Like we went over this yesterday, so I don't want to spend too much time overdoing this. This is the 15. It's the same spot. You've got the 15 reverse here, which gives you a new origin level here. So you could possibly create this as an origin. Possibly. You don't really have any hourly levels. You have this right here. So if this is 10 and this is 10, you have to try to play at least that part of the trade. Like if you're just playing this RA right here to the first bounce, you're completely misidentifying the implied trading odds on this trade, right? Like if you just hit play, and we all know this thing is going up here. Like if you're just simply playing it to the first, 5-minute level, that's fine if you realize that it's a scalp and you're taking re-entry somewhere on that backside of that trade. Like it looks like maybe right here, right? Like this looks like some kind of backside type of level on a smaller time frame. Or maybe this was like supported by a 1-minute origin right here. Break the move up. Yeah, you could try to go down here. Like if you're taking this, you have to understand that your implied trading odds, you could never be just stopping out like right here. You're taking such a big risk on one side of the chart that why would you go all in? And it would be such a reverse ideology. It would be like having pocket aces and taking reverse odds against pocket aces. So when I look at this, I like to think of them to start myself off with poker hands. Like I always relate this to poker hands. A 6-7 of clubs, for example, could be a great spot that could, crack pocket aces if the right run out comes. But how often is that going to be? Is that going to be the case, right? Like if you're taking those like lower tier implied situations and you can just hit play here, there you go. The level was hit perfectly, and you could have even gone deeper in the move to the next 10 of the move. But ultimately, if you are playing this as like pocket aces, if this level continues to hold, right, like it's going to be a huge move, and it doesn't. And so that's where you have that exact polarity kind of snap you in that trade, right? So you have to always look at these moves as implied odds. And that also gives you a lot of information too. So if this was the 10 and you're saying, hey, we're using one side of the chart to target the other side of the chart. And this is kind of what I was alluding to. This is what I was alluding to during the week where I said, look, you've targeted this level here. You've bounced off it perfectly once, and you could even go back and do that same level here, right? This was the earlier in the week trade where you have the break level of the move. You target it once, you move up, right? So you're now starting to ladder origin points. You've got an origin ladder happening where you have this to this, something we haven't talked about, but I think it's pretty obvious. I don't even think we need to talk about it. If you have an origin laddering another origin, if you break your ladder, one origin is breaking the next origin, break levels. It's like laddering break levels against each other. That, of course, hasn't been talked about yet, but I don't really think there needs to be much to say. You just put these in a container as, hey, we have an origin here. That's ladder point 1. We have an origin set up here. That's ladder point 2. If ladder point 2 breaks, it's breaking ladder point 1 because you've contained them into containers like that. I don't have to go over much of it outside of that. Maybe one day I'll make a full lesson on that, but that's fine. It's for now, that's enough. But you're starting to play these spots where if your implied odds are that large, you have to start taking the profits on the other side of the trade. So you have to start thinking about less premium positions, holding, not targeting polarity as stronger moves. Like, okay, imagine this here, this entry here, what we talked about yesterday. Imagine this entry here wasn't your premium entry, because your premium entry, you're going to go and you're going to be like, oh, look, there's a 15-minute untested level here. It's perfect. 15-minute untested level. Wow. Wouldn't that be amazing to hit? That would be like really good. And then you have another one here. So you have like 8, 9, 10. Now, I'm sure there are more points here if you start using trends and doing a bigger chart markup. I'm sure you can find more points, but we're just going to go with 8. We're not trying to nail perfect accuracy here on this thing. Let's put this in the middle. Center. 8, 9. Let's make them all the same color. It's already getting a little wonky here with colors because these actually should be color coded properly. Let's color code them properly as well. This one was an hourly, I believe. Nope. 4, was it a 15? It was also a 15, wasn't it? What in the bananas was this level that I just marked? I don't even know my own science at this point. It was a 3-minute level. I remember it was a 3-minute level. That's fine. 3-minute level. Oops. No. We don't want to do that one. Cancel that. Again, apologies. I'm sick, so my mind is a little broken too, not just my throat. So if you're looking at this, you also have to think of this in terms of polarity and what can and can't hit. We've talked a lot about polarity, but you also have to start thinking about things in terms of like premium and non-premium entries, right? Because not every move just goes from polarity to polarity. And when you see these things like non-polarized moments getting targeted and creating polarity on the bottom, it would almost be kind of the same scenario as having 6-7 and you know your opponent has pocket aces the way they played pre-flop. Like if this was a 6-7 suited entry and the board comes 4-5 suited of your suit and you've taken an entry here and you can see, whoa, look at that. It's not hitting any of the polarity points. This is a high risk trade. It's still laddering down. If we start breaking polarity on the bottom on a non-premium spot, like obviously the implied trading odds are huge here. So when you're in this trade and you start seeing this, you know that this trade is going to start breaking down in a pretty big way, right? Like you know this thing is about to start breaking down. Again, you have a non-polarized point attacking what would be the 10 out of 10 on a chart. So whenever you're in trades, you have to start thinking about the risk you've taken as implied trading odds. So if you were right now in the charts, for example, this weekly right here would be like a perfect example. So you can just go right back to this spot here. Say if you took this trade, you took this bounce, you started marking your levels, you have a 5-minute backside, which would be the first part that would hold you down. This is already a 10 out of 10. You would expect this thing to just pretty much snap the move. Okay, so first off, let's mark this up. I haven't done this yet. There is 0 origin points. So we can start there. We have our first trend right here. So remember, our spot on the bottom is a 10 out of 10 here. Do we have any 3-minute? Nope. Do we have any 5-minute? Nope. We have a 5-minute level. We can delete this. That's no longer needed. We have a 5-minute level here, so we can mark that as this. We can make this brilliant white. Good. So we have a 1-minute trend, 5-minute level, 10 out of 10 weekly spot, right? Go to 1-minute candle, see what happens. Break trend. Okay, good. break trend. You have hit your level. You have any origins on the bottom here? Not really. No origins. What do you have for developed holds? You have a 3, a 5. You have a 15 here as well. This is a big misstep to not see this. So it has hit this 15, and it needs to create over top of this 15. So this would be this would be what you'd be looking at, right? So you're in a hyperpolarized spot. Your implied trading odds are huge. The implied profits you can make are huge, right? Like the risk is high, and the implied trading odds you can make are pretty big. Just getting back up to a daily level, 6 or 7% here, getting back up to what broke the move down, seeing if you can actually get above, or some point that you can make, maybe even use this and create a 1 minute origin. Like it's a pretty big trade, right? 15-minute level stops you. You start holding your 15-minute level. Haven't hard closed it yet. Okay, you start hard closing your 15-minute level. What time frames are you on? Haven't hard closed the 3 yet. Haven't hard closed the 5. You have back tested this 5. Time is this at right now? 2:04. So you got a little bit of time, but not too much. I mean, you've already started to test things. You've hit a 10 out of 10, and just kind of like a micro polarity has stopped you. So now kind of at a minimum, you just want to stabilize and gain this part of the move. Right? So you just really want to stabilize and gain this to say, hey, we just hit a weekly. We need to start building timeframes on this thing. At least we need to start building timeframes up to gain that level. And then you also would like to say, okay, this is also going to be another level on top of it, which would be a 15. So it could not only be the 15-minute level, but it can be the hourly. So really you need to start putting out these kind of parameters of what you can gain. So let's mark this as the 15. You've taken your 10 out of 10 kind of polarized spot. You have the 5-minute level here, which you kind of need to gain in order to start gaining the 15. You've back tested your final level here. If you can't start gaining this, and now you're starting to close under 1 minute levels, like you've got 1 minute levels here and here. This is kind of showing you that the move is collapsing unless you can hold for long enough and break some other kind of trend. Like, do you have like a bigger 15? You do have a bigger 15 here, which is nice. So you do have a bigger 15-minute trend here, but you're starting to release this trade in a way. You're hitting this level here. So if you were to rewind this back to this moment, even right here, what do we have on the 15-minute right now? We have this as a possible spot that we need to gain. So we need to hold that. And then at the worst, we kind of can't really go below this one here. This is testing it right here. So we know once it tests it here, you can't really start developing hold levels underneath it, right? Because your implied trading odds are huge here. So you want to stay in this trade and give it time to mature because your implied odds are huge here. Okay, we've tested that final 5-minute body or the 5-minute wick. That's great. At this point now, you need to start, you've tested the level. You need to not do two things. You need to hold the level and you need to start developing the other time frame. So you'd go, okay, where's the 3? It's all the way up there. Okay, we don't need to mark that. Where's the 5? It's right here. Okay, good. What can we do next? Great. We're starting to maybe get over top of that 5. So here's that 5-minute level, right? Here's the 5-minute level where you would create that next point of support, right? So these are all things where we're using comparative analysis to make our buys, but we're also using a procedural queue of information to say, okay, what's next? So you're trying to get over this level. You can't. Okay, still trying to get over this level, but what would be detrimental is if we started closing a white candle under this, because now not only did we reject the gaining of the 5, because we're still trying to gain it, we're also starting to close under a 1, right? So you're starting to kind of release conditions on this trade. Well, that's not good. You just closed under the 1. So you didn't gain the 5. You can move that down to here, which is also the 15. So the 5 and those two are together. You've tested the body of the candle. Okay, kind of reset your expectations here. That's fine. The move is still kind of holding. You could also get over this point on the 3. You've got a 3-minute hold here. No big deal. So the last thing you want to do is now start developing under this candle, because at that point, you're kind of saying, I can't gain the levels and I'm hard closing below. So you're really seeing like the releasing of this trade. What else could you do here? You can mark a trend on the bottom. Sure. I'm pretty sure those are going to be gone at this point. Mark a trend. That's gone. What about a 5? That's kind of gone. Okay, not bad. We could be developing a 15. Okay, at least we've got something here. Oh, we're not at that point yet. Oh, well, I guess we know. I guess we know where we're going. Excuse the coughing once again. I'm fighting this cold, but you know, work goes on. Try to regain that level. It's not looking too bad. we've lost everything. We have one final hold level. We're closing underneath and failing to gain higher time frames.